Hey, what's going on, guys? Mike here. Wanted to create this quick video. I've been noticing there's a trend out there, in the world today that that cash is trash, right? And I think that for the most part, that is absolutely true. But I think that when I look out there at sort of the landscape today in terms of investment, and especially for sort of everyday investors, families, people who are employees and or have net worths under $1 million, kind of your normal person or family out there who's investing, certainly doing better than most, but certainly not the mega wealthy by any means. I think that there are some nuances that maybe should come into that conversation that people aren't really talking about as much right now, especially for people that maybe are a little bit more conservative than what's kind of put out there as how people should act when it comes to their investments. So, I mean, first off, this is not financial advice by any means, but when I create this quick video, what I'm referring to here is the idea of risk. In particular, I think the big concept that is not being talked about a whole lot, at least from my perspective, is risk reward ratio. So why don't you create this quick video? What I have pulled up here is just a simple chart of the S&P 500 over the previous 50 years or so. And if you knew nothing about the stock market, nothing about investing, you would look at this and immediately just intuitively understand that this is most likely going to trend down at some point. If you look at this chart, there can't be buying pressure forever. We can't go straight up forever. And this is not saying that I am not actively buying into the stock market or the S&P 500. I think I certainly do subscribe to that idea to some extent that cash is trash over the long term. But at the same time, I think, perhaps a better way to view cash is more so as an option to do something in the future, right? You're basically paying the fee of inflation in order to have the option to use that cash in the future. So I don't think cash is as bad short term as a lot of people seem to think it is, especially over the past 6 to 12 months. I think that's certainly been a trend. You should have no cash, and you should put all of your money into the stock market, have no emergency fund. I don't agree with that. I still do think that there is certainly a place for cash. Especially if your income is uncertain, or if you're looking to, deploy that cash at a certain time. I don't think there's anything wrong with maybe having a little more cash than you should in the short term, despite I think the very real fear of inflation out there, especially over the long term or medium to long term, 3 to 5 years, et cetera. So that being said, I mean, really the idea of risk versus reward, how I look at it is, if you're looking at the S&P 500 here, priced around 4,200, as of today, end of April 2021, you can imagine a scenario where, maybe you're wanting to put in, say $10,000 into an S&P 500 index fund, and that's all the cash you have. That's all the money you have to your name. The idea of risk versus reward comes in my mind where, a 50%, say there's a 50% decline, or there's a 50% crash in the S&P 500. If that were to occur, you would then have to gain 100% just to get back to where you were, right? So $10,000, 50% loss, you'd be right around $5,000. If you were to, for whatever reason, sell that position, right, because you needed the money at that point, and you now had $5,000 cash, you would be in need of a 100% gain just to get back to that cash amount of $10,000, which is where you started. So there's there's a disproportionate risk here. I think that not a lot of people are thinking about, especially folks that that are not ultra high net worth, right, and definitely cannot afford to take the risk, or maybe think they can, maybe a little more than they should. So that's kind of my take on it. Again, not financial advice, and this is not to say that I am not actively buying into the stock market. The major indices that are out there today. I mean, I just bought shares in the S&P 500, I think, last week. So certainly actively investing, and not to say that you should not invest, but I think the idea of having no cash that's accessible to you is not a good idea when you think about the risk reward ratio here. And again, really, don't really have to dive into too much of the fundamentals here. Just looking at the charts, I think it's pretty intuitive to most folks. So think about the realistic reward or gain that you may get in the short term, and then compare that to the risk or the potential downside here in the short term, and use that as your guiding principle. I think really for any investment. Hope that helps. That's kind of my take on it. If you like this video, if this was helpful, if this provided a new perspective, I'd encourage you to like and subscribe. Thanks for your time.